Introduction. Welcome to our channel. Today, we're diving into the world of bond ETFs, specifically focusing on the best bond ETF to invest in right now. If you've ever felt overwhelmed by the options available in the bond market, you're not alone. With so many choices, it can be challenging to determine which bond ETF aligns with your investment goals. In this video, we'll break down the key features of bond ETFs, how they work, and why they can be a smart addition to your investment portfolio. We'll explore the benefits of investing in bond ETFs, such as diversification, liquidity, and lower expense ratios compared to traditional mutual funds. But what truly sets our featured bond ETF apart from the rest? We'll highlight its unique characteristics, performance history, and the factors that make it a standout choice for both seasoned investors and those just starting out. By the end of this video, you'll have a clear understanding of why this bond ETF deserves your attention and how it can potentially enhance your investment strategy. So, whether you're looking to generate income, preserve capital, or simply diversify your portfolio, stick around as we uncover the ins and outs of this exceptional bond ETF. Let's get started and help you make informed investment decisions. Understanding bond ETFs. Bond ETFs, or exchange-traded funds, are investment funds that hold a collection of bonds and trade on stock exchanges, much like individual stocks. They play a crucial role in diversifying investment portfolios by providing exposure to a wide range of fixed-income securities, including government, municipal, and corporate bonds. This diversification helps reduce risk, as the performance of a bond ETF is not solely dependent on a single bond's performance. One of the primary advantages of investing in bond ETFs over individual bonds is the ease of access and lower investment minimums. When you buy a bond ETF, you're essentially purchasing a basket of bonds, which allows you to spread your investment across various issuers and maturities. This can be particularly beneficial for investors who may not have the capital to buy individual bonds, or who want to avoid the complexities of bond selection. Another significant benefit of bond ETFs is their liquidity. Unlike individual bonds, which can be difficult to sell and may have wider bid-ask spreads, bond ETFs can be bought and sold throughout the trading day at market prices. This accessibility makes it easier for investors to enter or exit positions as needed, providing greater flexibility in managing their investment strategies. In summary, bond ETFs offer a practical and efficient way to invest in fixed income securities, making them an attractive option for both novice and experienced investors looking to enhance their portfolios. Why choose this bond ETF? Today, we're highlighting a standout bond ETF that has garnered attention for its impressive performance and unique features: the XYZ Bond ETF. This fund has consistently outperformed its peers over the past 5 years, thanks to its strategic management team that actively adjusts the portfolio in response to market conditions. With a focus on maximizing returns while managing risk, the XYZ Bond ETF has become a reliable choice for investors seeking stability in their fixed income investments. The ETF primarily includes a diverse mix of bonds, such as U.S. Treasuries, investment-grade corporate bonds, and municipal bonds. This variety allows investors to benefit from different risk profiles, balancing safety with potential yield. U.S. Treasuries offer low risk and stability, while corporate bonds can provide higher returns, albeit with increased risk. By holding a blend of these bonds, the XYZ Bond ETF aims to deliver a well-rounded investment experience. When considering any investment, it's essential to be aware of associated fees and expenses. The XYZ Bond ETF boasts a competitive expense ratio of just 0.25%, which is significantly lower than many actively managed bond funds. This low fee structure means more of your investment returns go directly into your pocket, enhancing your overall profitability. In summary, the XYZ Bond ETF stands out for its strong performance history, diverse bond selection, and low fees, making it an excellent option for investors looking to enhance their fixed income portfolio. Market trends and analysis. As we navigate the current investment landscape, several market trends are making the XYZ Bond ETF a compelling choice for investors. Recent economic indicators, such as slowing inflation rates and moderate GDP growth, suggest a more stable economic environment. These factors typically lead to increased demand for bonds, as investors seek safety and predictable returns in uncertain times. The bond market often thrives when economic growth is steady, but not overly aggressive, making this an opportune moment for bond investments. Geopolitical factors also play a significant role in influencing bond performance. Ongoing tensions in various regions, including trade disputes and political instability, have led to increased market volatility. In such environments, investors often flock to safer assets like bonds, driving up their prices and lowering yields. The XYZ Bond ETF, with its diversified bond holdings, positions itself well to benefit from this flight to safety. Interest rate trends are another critical aspect to consider. The Federal Reserve has signaled a cautious approach to interest rate hikes, which is generally favorable for bond prices. When interest rates remain low or rise slowly, existing bonds with higher yields become more attractive, supporting the performance of bond ETFs. As the market anticipates a stable interest rate environment, the XYZ Bond ETF stands to gain from both capital appreciation and income generation. In summary, the combination of favorable economic indicators, geopolitical factors, and stable interest rate trends makes the XYZ Bond ETF an attractive option for investors looking to navigate the current market landscape. Risks and considerations. While the XYZ Bond ETF presents a compelling investment opportunity, it's essential to understand the potential risks associated with investing in bond ETFs. One of the primary concerns is interest rate risk. When interest rates rise, the prices of existing bonds typically fall, which can negatively impact the value of bond ETFs. This inverse relationship means that if you need to sell your ETF shares during a period of rising rates, you may face losses. Therefore, it's crucial to consider the interest rate environment when investing in bond ETFs. Another important factor to consider is credit risk, which refers to the possibility that bond issuers may default on their payments. The quality of the bonds held within the ETF can significantly influence its overall risk profile. Higher quality bonds, such as U.S. Treasuries, generally carry lower credit risk, while lower-rated corporate bonds may offer higher yields but come with increased risk. It's vital to assess the credit ratings of the bonds included in the XYZ Bond ETF to ensure they align with your risk tolerance. Lastly, we encourage viewers to reflect on their investment goals and risk tolerance before diving into bond ETFs. Understanding your financial objectives and how much risk you're willing to take can help you make informed decisions. By weighing these risks and considerations, you can better navigate the bond market and choose investments that suit your financial strategy. How to invest in this bond ETF. Investing in the XYZ Bond ETF is a straightforward process that can be accomplished through a brokerage account. If you don't already have one, you'll need to open an account with a reputable brokerage firm. Once your account is set up and funded, you can easily purchase shares of the XYZ Bond ETF by searching for its ticker symbol. Simply enter the number of shares you wish to buy and execute the trade. It's that simple. One effective strategy to consider when investing in bond ETFs is dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of the ETF's price. By doing this, you can reduce the impact of market volatility and avoid the pitfalls of trying to time the market. Over time, this strategy can help you accumulate shares at a more favorable average cost, which is particularly beneficial in the bond market. Additionally, it's essential to regularly research and monitor your investments. Keep an eye on economic indicators, interest rate trends, and any changes in the bond market that could affect the performance of the XYZ Bond ETF. Staying informed will help you make timely decisions about your investment strategy and ensure that your portfolio aligns with your financial goals. In summary, purchasing the XYZ Bond ETF is a simple process, and employing strategies like dollar cost averaging, along with regular monitoring, can enhance your investment experience. Conclusion. In today's video, we've explored the compelling reasons to consider investing in the XYZ Bond ETF. We discussed its strong performance history, diverse bond holdings, and low expense ratio, all of which make it an attractive option for both new and seasoned investors. By providing exposure to a variety of fixed income securities, this bond ETF can help you achieve greater portfolio diversification and stability. We also highlighted the importance of informed investing. Understanding the risks associated with bond ETFs, such as interest rate risk and credit risk, is crucial for making sound investment decisions. Ongoing research and monitoring of market trends will empower you to adapt your strategy as needed, ensuring that your investments align with your financial goals. As we wrap up, we encourage you to engage with our content. If you found this video helpful, please consider subscribing to our channel for more insights on investing and finance. Don't forget to like and share this video with friends or family who might also benefit from learning about bond ETFs. Your support helps us create more valuable content and reach a wider audience. Thank you for joining us today. We hope you feel more confident in your understanding of the XYZ Bond ETF in the potential it holds for your investment portfolio. Stay informed, stay engaged, and happy investing.